Good morning, everyone. Oh, what was that? What was that noise? Was that you? The the other siders? Who in this room is from Victoria, from Melbourne? Hands up. A couple of you going back today? From what I read on the news this morning, I think you should stay. You've got no power for the next. It looks a little bit dismal over there. The coal-fired power station's not doing too well. Just stay here in our 43-degree heat and just relax in the air conditioning. Good morning to those of you who have managed to make it up early enough after our big night last night, courtesy of the team at Canaccord. Many of us went to Sandrino's and it was an absolutely beautiful night, and we were actually blessed with the weather. I managed to get my hands on some of the prawns from Exmouth and they were absolutely plurry divine. Did you get some as well? No, sorry about that. I stood at the doorway as they came out in the end. I've become an old hand at this after these years. We've got a very big day to wrap up day 3 of our conference. Once again, I'm pushing through 35 different presentations, so 35 opportunities for you. We're going to start off the morning. Actually, while I'm on that, I had a chat with Mark Cesar, who was our second last presentation today, out in the exhibition hall today. And Mark was very, very, very excited about his spodumene, and he says his spodumene is better than any other spodumene that you'll possibly see on the program at Explorers. So you might want to stick around for that because he's certainly very over the top about it. Right, so first conversation this morning is actually a little bit of education for us. We've got Dr. Nikita Sergeev joining us on stage. He is the principal consultant from ERM. So the topic that he's going to put in front of us today is very simply, as you can see, it's exploring Australia's clay RIU deposits from Snapshot all the way through to challenges. And we were having a chat about it this morning. There's some interesting innovation that's making its way into Australia that could unleash more of these resources for us. Would you please make Nikita very welcome, everyone?
Thank you. It's great to be here. I will give you a brief overview of clay-hosted rare earth deposits in Australia and discuss some existing challenges and exploration considerations. As many of you know, rare earth elements are in high demand, which is expected to increase by 7 times by 2040. Clay-hosted or ionic adsorption clay deposits are a valuable source of rare earths. Their input in the total resource is less than 4%, but they account for over 80% of the world heavy rare earth supplies. These deposits, formed by weathering, have many characteristics very attractive for mining. Elevated content of magnet and heavy rare earths, high tonnage mineralization, though lower grades, low operating costs due to near-surface mining, low stripping ratio, no blasting required, quick and cheap to define resources by shallow air core drilling, no crushing involved, simple recovery techniques using cheap chemicals at room temperature, and also importantly, there is low radioactivity. The majority of clay-hosted deposits are located in Southeastern Asia. Over 200 mines are in the southern China and 100 in Myanmar, adjacent to the China border. Only a few deposits are known around Africa and America, though 2 of them in Brazil are of a large scale. A number of deposits were recently discovered around Australia. Let's have a look at them in more detail. In Australia, most of occurrences spread around western and southern parts of the country, clustering in the Esperance region and in the Yilgarn and Golek cratons. Most of the deposits are hosted by granitoids and felsic volcanics, with Kapamara in South Australia and deep leads in Tasmania developing over sedimentary rocks. Australian deposits, red circles here, are moderate and small in size. They are generally comparable in size with the Chinese mines, though grades are generally lower. 2 large Brazilian deposits contain over 1 million tons of rare earths each, with Caldeira, discovered last year, being highest in grades. 2 large Brazilian deposits contain over 1 million tons of rare earths each, with Caldeira, discovered last year, being highest in grades. 2 large Brazilian deposits contain over 1 million tons of rare earths each, with Caldeira, discovered last year, being Blanket-style mineralization in residual regolith developing over granites is the most common type deposits around Australia. The Esperance region is the largest exploration hub at the moment, with an actively exploring area 250 kilometers long and 60 kilometers wide. The Newman deposit, now Salazar project, found in 2011, was the first in Australia. All the other prospects have been discovered for the last 2 years. Mineralization there developed in weathering crusts over Proterozoic granites and gneisses. It's hosted by saprolite, clay zone and saprock, forming continuous subhorizontal blankets up to 20 meters thick. Rare earths are mostly recoverable by strong acid leaching, indicating that metals occur in a colloidal form. Percentage of easily leachable rare earths is commonly low, less than 10%. Exploration for clay-hosted deposits in Australia is currently driven by grades. Most of discoveries were made accidentally, exploring for other commodities. This mineralization type, previously known as only found in China, is relatively new to Australian industry. Existing exploration models and knowledge base are still at the development stage. There is a steep learning curve for geologists starting new projects here. A lot of unknowns, lots to learn about the mineralization formation, critical controls, and the best exploration approaches to take. Although a mineral system looks relatively simple, there are lots of issues to consider in the targeting process. The system is generally the interplay between geological settings and magmatic evolution on one side and weathering processes on another side. A two-pronged targeting approach is required, chasing both fertile source bedrock and kaolinite-rich residual regolith. And talking about grades, average crustal abundance of total rare earth oxides is around 200 ppm, and only moderate five-fold enrichment is required to upgrade background values to the economic 1000 ppm level. This is much less gradient compared to many other metals. For example, 300 times enrichment is required to upgrade gold background abundances to 1 ppm level. So this means that rare earths are not that rare. So why we have not too many deposits around Australia? Apart from weathering-related issues, grades are greatly affected by recovery problems. Only easily leachable part of mineralization should be considered, because traditional cheap processing by ionic solutions only extracts this part. Most of the Chinese deposits and Caldera in Brazil and Tantalus in Madagascar show recoveries above 60% benchmark. In a comparison, most of Australian deposits and prospects are low in the easily leachable component, except the deep leads in Tasmania with 40% recovery. Presence of adsorbed rare earths is the best case scenario, as requires low acid consumption and subsequently is relatively cheap. Dealing with stronger bound forms of rare earths, colloidal, mostly locked in iron oxides, or refractory minerals requires more aggressive leach conditions and more expensive. With stronger acids, which is reflected by decreasing pH on this graph, cost of chemicals alone can get higher than product revenue. The recovery of metals is often a decisive factor for further project development. Standard leaching recovery tests are relatively simple. Their completion is strongly recommended at very early stages of exploration to ensure viability of the project. So which host rocks are most prospective for clay-hosted deposits? They are mostly formed over granites, felsic volcanics, and alkaline felsic intermediate rocks. There are no size, geometry, or age constraints reported on the fertile granite intrusions elsewhere. Muscovite and muscovite biotite granites are considered to be the most prospective. Deposits are commonly developed in the marginal parts of intrusions and on the late stages of granite emplacement. Fractional crystallization and magma differentiation are the key processes for concentrating rare earths in alkaline igneous rocks. Late-stage hydrothermal and automated somatic processes are essential for conversion of resistant rare earth minerals into the weatherable species. The second key component of the mineral system is the weathering process, greatly affecting enrichment, partial remobilization, and rare earth fractionation in the weathering profile. Clay regolith rich in kaolinite and halloysite is the critical part of the mineral system. Smectites appear to bind rare earths too strongly, preventing their recovery using dilute electrolyte solutions. Same applies to iron oxides. This is thought to be the main reason why mafic rocks, commonly weathered to smectites and iron oxides, are not very prospective for ionic adsorption type mineralization. Subtropical to tropical climates with moderate to high precipitation and temperatures favor chemical weathering to the clay zone formation, and low to moderate denudation rates ensure the preservation of thick regolith profiles. The majority of economic deposits are developed over peraluminous to metaluminous granitic plutons. Most enriched granites belong to high potassium, calc-alkaline to shashanitic series, so highly siliceous, over 70% silica rock compositions, medium to high sodium and potassium, and lower calcium, lower levels of phosphorus, titanium, and iron, which could bind rare earths into immobile secondary phases. And their rare earth signature of the protolith generally controls the rare earth distribution in the subsequent weathered mineralization. Mobilization of rare earths in the weathering zone is mainly controlled by the presence of mineral hosts susceptible to dissolution in acidic groundwaters. Zircon, xenotime, and monazite, most common minerals in hard rock deposits, are resistant to weathering and retain in the regolith. Fluorocarbonites, gadolinite, allanite, and some other species are relatively mobile, releasing rare earths into supergene fluids, and they actually potential minerals to form clay-hosted deposits. Special attention needs to be paid to heavy rare earths. Apart from magnet-type terbium and dysprosium, there are also very highly priced lutetium and holmium in this group. The formation of this type deposits, hydrothermal overprinting on the later stage of granite crystallization is essential, as it commonly upgrades the mineralization by the heavy rare earth-rich fluids. Albite-rich, muscovite, or 2-mica alkaline granites are most prospective for heavy rare earths. Parent granites are highly siliceous, over 75% silica, alkaline, and high in fluorine. They are also depleted in iron, in magnesium, calcium, and phosphorus. The heavy rare earth signature of the bedrock source is commonly not changed by weathering processes and inherited by the clay-hosted mineralization. And to summarize, successful exploration for the clay-hosted rare earth deposits requires a good understanding of both fertile bedrock source and weathering evolution. The presence of easily weatherable rare earth minerals in the source rocks is thought to be the primary control of the desirable ionic adsorption type deposits. And bedrock analysis to be focused on late-stage hydrothermally altered parts of granite and alkaline intrusions. A number of chemical and mineralogical constraints to be applied to identify the most prospective ground. Exploration to be prioritized to the heavy rare earth enriched mineralization type. And regolith studies supported by geophysical data in TOE to be used for identification of continuous blankets of residual clay regolith. So I think Australia has a great potential for discovery of substantial mineral resources of the clay-hosted rare earth mineralization in the near future. Thank you.
Thank you very much, Dr. Sergeev. All right, Mick Wilson, Executive Director, Bellavista. Would you like to come and join the stage? Now, first explorer to take the stage for day 3. He's had a very, very busy year down in Ravensthorpe, and he's so excited by what his team is looking at down there. He's gone out and he's got a couple of elephant hunting licenses, by the sounds of things. Let's see what he has for us today. Make him welcome, please, everyone.
Chrissy, you actually got the wrong part of the state. We're actually up in the Upper Gascoyne, but that's all right. Look, I am going to talk about some elephants this morning. I'm going to actually start off, we'll do the usual disclaimer, and go straight into some hot off the press. So last week we announced that we've got ourselves an interesting uranium target out on our ground in the Upper Gascoyne. Now, before you think we're chasing the market here, we are not. When we listed Bellavista 2 years ago, this was in our prospectus, and there's a really interesting backstory here. As we're doing all the due diligence for the float, there's a few old reports we have to go through and check the geology and see what people have done in the area. And there was this one report by GeoPico in 1981. And they'd gone out, they had a radiometric anomaly. It was over about 35 kilometres long strike in a sedimentary sequence, and they sent a couple of geos out to go and see what it was all about. So these guys went out in a helicopter, they collected about 16 samples, and there were some really interesting numbers in it. The uranium's kicking up around 0.14% U3O8, and there's a lot of base metals and other things in with it. But I went back and had a look at the front page of that report, and it was none other than Dr. Julian Hanna working for GeoPico in 1981. So he would have been a very young geologist at that time, but he was up there looking around this part of the world. And to be fair, it's been 30 years, and it's now only us coming back 30 years later that this is being followed up. Now, as a geologist, you always want to see data stacking up on each other, and this is a clear example. We actually reprocessed the radiometrics, and we found in this particular area there's a stronger radiometric signal than the rest of the 35 Ks of strike. We also flew the area with VTEM last year, so this is why this story is only evolving now, and from that interpretation from the VTEM surveys, there's quite a strong conductivity anomaly sitting with that uranium anomaly. So last week we sent, there was a window of temperature between very, very hot and very hot. So we got the team up to Abra Mine, a helicopter in from Newman, and we went out and had a good look on the ground. So those couple of points at the bottom there, it was the first field mapping trip for this year. It's still a little bit too warm to be up there on the ground full time, but we mapped the entire 2.5 Ks. We're very pleased with what we've seen on the ground. We took approximately 50 samples of rock chips along that particular zone that we think is the right thing, and we expect to see those results coming through in the next 4 to 6 weeks. So just some context with that. You can see the guys out in the field there doing their job. That's where it sits on that broader scale. So there's about 35 kilometres of strike there. The particular area we targeted is in that little box. But what it's all about for us is a bunch of northwest structures that are coming through and cross-cutting this system. And where we see those northwest structures, we're getting slightly stronger anomalies in the radiometrics. This comes back to what could it be? Sedimentary uranium, very interesting, but if we've got some buried ISCGs up there, far more interesting. So very early days on this, but we've got all the right pathfinders. We do have good historic uranium results, and we're pretty excited about where this could lead. So really my first elephant I'm going to talk about is the elephant in the room, and that's uranium. Here we are in a nuclear-free Frio, in a state where uranium mining is not allowed, in a country that has the endowment of the third largest amount of uranium in the world. So I'm just a simple geologist, but for mine, I think our policymakers need to have a good think about that. And if we really truly believe in a decarbonised future energy system, then uranium has to at least be in that conversation. So let's just move on now to the rest of ours. So when we listed Bellavista 2 years ago, we took a view on this part of the world, the Ebon Basin. The old Bangamore Basin, it used to be called, it's now the Ebon Basin. It's about 130 kilometres southwest of Newman, and it's an area that's kind of been a little bit forgotten in Western Australia because we have our iron ore to the north, we have our gold and nickel systems in the Yilgarn, and there's all this other rock in between that we sort of just drive through. So for many, many years, it's been a forgotten province because it's Proterozoic, not Archean. And the point being is in the last sort of 5 years or so, with rare earths, all these new interesting things coming through, this area is becoming pretty hot. We love it because there's some fantastic indicators there. Copper high grades, silver high grades, zinc high grades, uranium, vanadium, all these things exist in this part of the world. So it's a really interesting part of the world. We've got a big swag of the ground, and what we really love is the geology. So it's actually quite remarkable. We've got Mount Isa age the basin. We've got Olympic Dam age intrusions, and we've got mafic sills the same age as the Fraser province and the Musgraves. So this is my second elephant reference. When you're looking for elephants, you have to look in elephant country. So Bellavista listed on a project called Brumby. It was initially discovered by CRA in the late 90s, and they went up there drilling with an RC rig, attempting to understand what they saw, thinking they were looking for a SEDEX. They drilled 29 holes, of which only 13 actually made it to depth, and of those they got consistently zinc, silver, copper, a little bit of other metals, but it just didn't seem to be going anywhere. It was just this big, lazy anticline full of base metals. It turns out they probably had the wrong model. They were chasing SEDEX, and this thing is what we call a hyper-enriched black shale. Now, hyper-enriched black shales are elsewhere in the world, but this is a new thing for WA. So I'm not going to pretend that you guys need to know about these things, but what I can tell you is they're big, they're long-lived, and we are on record saying we need to get a partner for this one. The opportunity is massive, global significance. So Brumby's there, Eastern Australia, Mount Isa Belt, Europe, there's plenty of these things around. So just for some context, the Hebs at Brumby is approximately 12 kilometres long. That's from Fremantle all the way to Scarborough, and it's about 7 kilometres wide. So that's from Subiaco to City Beach. So the entire western suburbs, one deposit, 30 metres thick, very consistent. But then comes the big picture, which is it's just the same rocks across the entire northern edge of the basin there. So that's pretty much from Mandurah all the way to somewhere north of the Yanchep. So that's the scale. What else do we have in the area? A bunch of ISCGs. Same age as Olympic Dam, likely buried, but we've got the indicators that they exist. Thirdly, our epigenetic copper-nickel opportunity. So we're really excited about what we've got up there. Key point being big elephant country. So let's go back to the company now and have a look who we are. So our top 4 shareholders are the 2 management teams of a couple of the most successful gold companies in recent times. Our top 20 control 55% of the company. We have a very small number of shares on issue, Our market cap is probably reflecting pretty much our basis at the moment, and you know, we're genuinely set up for new opportunities and new things. So management team, you'll see a few faces there that are familiar, along with a few others. We're aligned with shareholders. We're looking to develop what we've got, and frankly, it's the last slide that's the key. So we're backed up by some of the most successful mining professionals. We're leveraged against commodities, so we're not all in on one particular one. The project has real world-class potential, and we are seeking, discussions are genuinely underway with funding and development opportunities. The board and management have a track record of adding value, and we're aggressive and innovative explorers. So if you want to get on board, fantastic, but I'll let you know there's only about 160,000 shares on the sell side at the moment. So that's it. Thank you very much, everyone. That's the Bellavista story.
Well done, Mark Wilson. Well done indeed. Yes, I got you mixed up. Remember I said I was talking to Mr. Cesar earlier on today, and he's down in Raven, so apologies for that. Definitely up in the Gascoyne. All right, Ryan Parkin, come and join us, sir. Now, you've had a very big year last year. You ended off with that nice big €18 million grant, correct? Correct. Yeah, I'm just making sure I get the facts right this time. And you had a really interesting announcement on Monday, which I'm sure you're going to go into with everyone. So would you please put your hands together, everyone, and welcome Ryan Parkin, Infinity Lithium Corporation, to whet your appetites this morning.
Okay, well, look, thanks again for the kind introduction, Chrissy, and thanks to Jackson and the Vertical team for another great RIU conference, and by all accounts, it's perhaps the most successful to date. If you can please note the various disclaimers and cautionary statements, you can find these on the corporate presentation that has been lodged on the ASX this morning. Infinity Lithium is progressing the fully integrated San Jose lithium project located in the Extremadura region of Spain, and we'll be using one of Europe's largest lithium resources as a feedstock for an on-site lithium chemical conversion plant to produce battery-grade lithium hydroxide. And of course, we all know Europe is going to require vast amounts of battery-grade lithium chemicals in the development of their localised lithium-ion battery value chain. This feedstock, this mine, has a long life of 26 years and it remains open at strike and depth. We stopped drilling at 100 million tonnes, and ultimately there's huge potential for this project to continue over and above that 26 years. In terms of project ownership, we own 75% of the project through our Spanish subsidiary Extremadura New Energies, and we maintain a call option to move to 100% at any time prior to the final investment decision. So this is a very significant project in terms of scale, opportunity and strategic value within the European Union. Just to touch on some of our corporate information, we have about 460 million shares on issue and a market cap of close to $37 million. Our closing cash balance at the end of last quarter was 9.6 million Australian dollars, and as Chrissy kindly referred to in the introduction, we're also the recipient of an 18.8 million euro, or close to 31 million Australian dollar grant in the project vehicle. So we received those funds in January, and ultimately those funds will be allocated throughout the project financing and development of the project. A highly experienced board of directors sees John Starrink lead our technical team. He is our CTO and leads our technical advisory committee, working hand in hand with Dr. Dave Marie, the ex-principal scientist from Talison. Both have a wealth of experience in lithium chemical conversion, particularly hard rock, and they have been responsible for developing a novel process flow sheet that has seen exceptional recoveries to date. So I just want to touch on some major milestones here at the front end. We've managed to submit our exploitation concession application, probably in language we are more familiar with here, our mining licence application, and we announced that on Monday this week. This is a very significant milestone on the back of a successful permitting strategy that has seen us pivot towards an exploration permit and undertake what's referred to as a direct concession avenue. This is a collaborative and multi-stage process that sees a sequence of events for this final lodgement. So we've been working closely with local and regional stakeholders to negotiate this position and find an avenue forward now to reach this very significant point in the project. And this is followed on from our urban compatibility report. We received a favourable outcome there. This is the one report or permit that will be required at the local level, and ultimately where we move forward from here through the exploitation concession application is at the regional level. Late last year, we received news that we'd received grant funding under what is referred to as PERTE VEC TOE, 18.8 million euros, about 31 million Australian dollars. I mean, this is very significant. These are the first funds that have been allocated to lithium chemical conversion, lithium resource projects within Spain, and it was the sixth largest within this cache, and we were following behind some pretty big names there behind some major automakers. So it's very significant in terms of the endorsement in country at the national level as well. And also, late last year, we completed our updated scoping study. Ultimately, we have an underground pit and, an underground mine, and we'll be moving to develop a fully integrated facility on site. But it's really in and around that conversion process, using pressure leaching that has seen exceptional recoveries and significantly improved our carbon footprint, which is entirely relevant for the EU market. So just to touch on that scoping study will be producing in a steady state environment close to 33,000 tonnes per annum of battery grade lithium hydroxide, which is very significant for the European market that will be screaming for this material over the coming years. Currently there are no lithium chemicals produced of battery grade quality to support that market. We have a low OPEX and a very efficient process flow sheet that will use co-energy generation through our patented Livestream RPK process. And through this process, we've also simplified unit operations. So we've managed to eliminate the need for calciner and beneficiation. We'll be utilising our ROM at the front end of the process and ultimately mitigate the risk in and around the availability of natural gas within Europe. The study itself saw the process recoveries assumed at 90%. We've subsequently undertaken further lock cycle test work that has seen a marginal increase in that. So we've got great confidence in this particular process, and we'll be moving into upscaled development shortly. And just finally, in terms of our ISO compliant measure, the EU is going to be moving towards a battery passport, and a lower carbon footprint throughout the value chain is key to operating in Europe. So we have managed to position ourselves at the lower end of that from hard rock sources. And again, this is all feeding into that same thematic within that localised value chain and the need for green materials within the European Union. A lock cycle test work program that was completed, again, greater than 90% recoveries, obviously will have implications when we remodel the project, and the data that has been obtained from this will be assisting us as we move into demonstration plant and into DFS activities later this year. The project economics, we can see here a very robust project, a low C1 cost, processing approximately 2 million tonnes of run-of-mine material to produce 33,000 tonnes of battery-grade lithium hydroxide per annum. I may just touch on the process itself and really the simplified unit operations. Again, we'll be mining this material, we'll be undertaking the primary crushing underground, we'll be undertaking the milling then closer to the conversion facility, and ultimately undertaking this process where the byproducts as well have an active market in Europe. The resource itself, it's been defined in the market for a long period of time, 111 million tonnes at 1,000 parts per million cut-off, or close to 65 million tonnes at 2,500 part per million cut-off. This is a lithium-bearing mica. Yes, it's a lower grade ore, but this is a purpose-built lithium chemical conversion facility on site using this lower grade material as feedstock. We are not in the business of moving a low grade concentrate to other markets globally. So the Livestream process itself will see reduced residence times, a simplified process operation and improved environmental profile. This innovative process that has been essentially patented now could be applicable to other low-grade lithium sources globally, whether it be lithium-bearing micas, whether it be clays. But at the end of the day, this is a process that has been tailored in response to the local community. And this is a project, as we've seen through our permitting, that has seen massive gains politically and administratively as we work with the local stakeholders, as we work with the regional government to progress this project in a form that's going to be suitable to accelerate development. And just finally here, in what must be the fastest 15 minutes ever, Chrissy, is the exploitation concession application that has been lodged. Ultimately, all the work that we've undertaken here, we had our exploration permit granted early in the year after a very short processing time. So again, pointing towards that collaboration with government. We undertook an EIA scoping document, which was a collaborative document with the regional government, and ultimately those outcomes will accelerate the assessment of now that ECA that has been lodged. We've also lodged a premier application, and if we are to receive a favourable outcome there as a project of regional and public interest, we too will benefit from an accelerated permitting outcome. And we've seen that with Envision, who are building a large 30 gigawatt battery plant up the road, about 100 kilometres in the same region of Extremadura. And just finally, to touch on maybe at the higher level, yes, we've been awarded some grant funding in PERTE 2A. We've got a submission in for PERTE 2B for additional grant funding, and PERTE 3 has also been announced, where the Spanish government will be allocating 1.2 billion euros to this environment for the critical development and green innovation. And we're yet to see details on that, but again, these are funds coming from within Spain. Not to be confused with the Critical Raw Materials Act, which too is accelerating. It has passed the European Parliament, the European Council, more than 350 billion in grant funding and low interest loans. Tax relief will be made available. So this is really accelerated, and we're waiting to see the details behind that as we move forward to the next stages of development, and will play a key role in bringing critical raw materials projects and conversion projects to fruition in the European Union. So look, I might leave the presentation there. I mean, we have this online. It's been lodged with the ASX. Thanks for everyone for making it here today, and I hope you enjoy the rest of the conference. Thanks, Chris.
Right, I'm stealing 3 seconds off me early in the day. Chris Piggott, are you going to be on time, my dear boy? I think you will be. Now, Chris Piggott here in his role of MD from Leeuwin. You weren't here last year, were you, Christopher?
No.
No.
I've got half an hour, don't I?
No, pardon? No, mate, no, you don't. Let's just come the raw prawn with me. So this time last year, you were waiting to ring that little bell. So you're just about to come up to your first birthday celebrations, listed in March. It's been a really, really big year for them. Let's see what they've got in store for 2024. Please make him very welcome.
Good morning, and I'll run you through our story about Leeuwin Metals. We're focused in Manitoba looking for critical minerals. Please read these. Bit of an overview of what Leeuwin is. So the board of management team is composed of Simon Jackson as the chairman, myself, Chris, I'm the MD, I'm a geologist. We've got Scott Williamson as a NED from Blackstone, and Nick Catras, co-sec in the crowd. We also have a couple of people in Canada running operationally on the ground. We've got Glencore as a 10% holder, a strategic shareholder there. Not only are they a equity holder, we also have a technical committee formed with them. And I think from a company from our size, it's really helpful having a company that big and having access to that technical insight and guide some of the exploration we get to do. Our projects are located primarily in Canada, but we also have some ground in Western Australia. And for us, it's really important to be in tier 1 jurisdictions, low geopolitical risk, but importantly for Manitoba, there's a lot of infrastructure. There's rail, roads and hydropower. And I think, as the world becomes more and more conscious of this stuff, Leeuwin has got the projects in the right place. And on that, our projects are definitely focused on critical minerals. It's a cyclical nature of the commodity cycle here, but we feel that our projects have a bit of meat to them. And on that, our Cross Lake's our lithium project out in Manitoba. It's our flagship project. And there we're seeing 20+ metre wide zones at +1% lithium in historic drilling. We're also seeing a kind of 4.7k trend of mineralisation, where we're seeing the same types of pegmatites along that whole strike extent. So a real kind of large-scale exploration opportunity out at Cross Lake, and a big catalyst coming up in the next few months as we get the drill rig out there. We also have our nickel project, the William Lake Nickel Project. It's in the southern part of the Thompson Nickel Belt. We've been able to deliver some pretty good results from that project, but nickel is kind of a bit of a tough commodity at the moment. But with the location of this project, access to hydropower and support of shareholders, we feel that this project will have its day in the sun. And as we kind of went through, we are relatively new, and so since listing in March this time last year, this kind of gives a bit of an overview of what we're about and what we like to do. We're very much committed to doing work on the ground and putting money in the ground. So since listing, we've put out 20+ metre wide zones at +1% lithium. Fieldwork, we expanded the tenure position, and we've got our drill permitting underway and be drilling out at Cross Lake later in the year. And at William Lake, we completed our drill program out there and delivered some pretty positive results. 20 metres at plus 1% nickel, and 6.5 at plus 2.5% nickel. So pretty kind of material results from that project as well. And we're looking to continue that approach to put money in the ground and create value for shareholders via discovery. Why Manitoba and why Canada? So Manitoba, it's got a long history of mining. While people may not be super familiar with it as a jurisdiction, it's right next to Ontario. Everyone's obviously heard of James Bay, Quebec and Ontario, but Manitoba's the next province over. There's mines, there's nickel, lithium, copper, gold mines, potash there, everything you need. It's in the smack bang in the centre of Canada. You have access to rail, good roads, cheap hydropower. So on a success basis, you can then export product to, out of port to the north or to America and supply those emerging battery supply chains. Additionally, Canada's really kind of trying really hard to incentivise exploration. I mean, we have things available like flow-through funding, but also grants. We achieved some co-funding last year for some drilling we got to do, 300 grand Canadian. We also have access to infrastructure funding on a success basis later down the line, and it's free trade compliant. So this is our flagship project at Cross Lake. It's over 2,000 square kilometres of tenure out there, over 70 kilometres of greenstone. So what originally drew us to the project was this place called Spodumene Island, where there was some historic drilling there that hadn't been assayed for lithium, but there was logged pegmatites with spodumene in. We were able to locate some of that those drill holes, and from that's where our plus 20 metre wide zones at plus 1% have come from. And already we know there's about a 700 metre strike of a pegmatite swarm there, about 300 metres across. And from the fieldwork we got to do last year as well, we're able to go out there and build up a bit more of a larger exploration story around, that whole trend, demonstrating the same types of pegmatites we saw in that historic drilling. And so when we look at what the historic drilling looks like at a bit more of a local level, you get a sense of the type of scale and grade that we're already seeing. What gets me kind of really encouraged about this, obviously you're seeing pretty good grades, up to almost 2% lithium in the historic drill work, but you're seeing multiple stacked pegmatites of different orientations. When we're out in the field, we see large spodumene crystals in outcrop, and from here you can kind of see on the right-hand side of the page, that's where the historic drilling took place, and we've got those zones of mineralisation. But throughout this whole 4.7k of strike, we're seeing the same type of geology and the same type of pegmatite. So end to end of that 4.7, one end we're seeing the pegmatite swarm we're drilling, the other end we're seeing a rock chip that we took at 4% lithium, and all in between that we're seeing pegmatites, and took channel samples at plus 1% lithium there as well. So when we look towards what we've got planned this year, there's a major catalyst for us for our drill program. We've got an initial 10,000 metre drill permit underway, going through that process, but we're going to phase the exploration out there, and in the coming months we'll probably do a first initial 2,000 metres. And for a company like us, that's a major catalyst for a potential significant discovery out in Cross Lake, out in Manitoba. We're also looking to expand the regional exploration, so not only will we be focusing on the area of drilling and that 5k trend, but also within that 70k's of strike of greenstone belt. And on a discovery, there's potential here for a new province of lithium mineralisation in this region, and Leeuwin has the first mover advantage and really cemented our ground position out there to grab the most prospective ground really cost effectively. This is our nickel project. This is in the southern part of the Thompson Nickel Belt. The Thompson Nickel Belt is a world-class belt. We've got over 500 square kilometres here of tenure, and that's what originally got Glencore really interested in what we're doing out here. So you can see here there's multiple mineralised intrusions. They're generally ultramafics, and within that you're seeing pentlandite, and you're also seeing some PGEs enrichment there. And we went out there last year to go out and test this idea of some high-grade shoots, testing the grade and the width potential. And we delivered almost 22 metres at 1%, including 1.35 at 5% nickel. Also 2k's away, we drilled another hole 6.5 metres at 2.5%. And I think in a more kind of buoyant nickel market, these results would get a bit more appreciation. But definitely I think you're seeing more and more in the nickel space, tier one jurisdiction, access to low carbon energy that's cost effective, and able to access North American supply chains. Projects like William Lake will become very significant in the right time. So why Leeuwin Metals? I haven't really talked about it. So you get all this for about an EV of about $3 million. So all in all, I think it's pretty compelling value at this point. So we've got a good management team both, I think, on the board, it's really good having the people support us to date, but also being able to execute the work programs on the ground in Canada. We've got Glencore there as a technical advisor and a shareholder, very focused on tier 1 jurisdictions. We want to be in the right kind of places to look for these metals and security of tenure, the rule of law. We're young, we're motivated, we're applying modern exploration tools to our projects. And the thematic of these critical minerals, especially in North America, is only getting stronger, even against the backdrop of the softening prices. And in that regard, we are very conscious that we have to do the right thing and we have to operate to a high standard. So we have been engaging with all stakeholders along the whole journey so far. So LM1's our code, our market cap's about 6 mil, we've got about 2.7 in the bank, EV of about 3, extremely tightly held, board of management own about 30% of it, Glencore's about another 10%. So very tightly held. We're very motivated via discovery and share price appreciation. And with our drilling up in the coming months, there's a major catalyst for a significant re-rate and a significant new lithium discovery in North America. Thank you.
I was watching Christopher did very, very well. But don't play with the MC. All right. I think we're going to Arizona next, aren't we? Now, there's some interesting chatter about you and your team towards the end of last year. Did you read it? Saying that you may be the next big draft pick, the #1 draft pick. So the title was, could be Eagle Mountain Mining, could be the #1 draft pick on the mid-tier copper scene. How are you feeling? How's the team feeling as you launch into 2024? Good?
Yeah, the team's great. Yeah, no, I've had some great success of the project this year, and they're all energised. It's nothing like getting a good team of geologists together, and it's a lot of enthusiasm. So
you have got a great team. So enthuse us this morning and see if we want to jump on board and fly the flag for you. Would you please make welcome everyone, Tim Mason, the CEO.
Great, thanks very much, Chrissy. Do appreciate it. Thanks to Jackson and the team for putting on a great event here. Look, I'm really excited to tell you about our 2 copper projects in Arizona. The Oracle Ridge Copper Project is the focus of my presentation, along with our Silver Mountain project as well, which has some really exciting opportunities for a major scale project. Important disclaimers. So we're about copper and we're in Arizona. Arizona is a place where you get major copper projects, and I don't think there's many people not, on the bus that copper has that potential to really rally. Robert Friedland recently, forecast that copper could go up about 10 times. I'd be happy with, almost 50% at this point in time. But look, if that's the case, that's going to bode very, very well for copper explorers and developers such as us. The US has got targets to have 100% clean energy by 2035. That's going to require an enormous amount of copper. That's why they recently put copper as a critical material and supporting that with funding and getting copper projects online in the US. So again, that's perfect for us. Before I go on, I'll just give you a bit of a quick background. So we were founded by Charlie Bass, who many of you know, discovered Jundee back in the day, one of the joint founders of Aquila Mining. He's got a great track record of finding, developing companies and projects. So he put this company together originally. I was lucky enough to join the story about 3.5 years ago when we bought the Oracle Ridge project, which is in Arizona. So this is a last mine in the early 90s at about 1 million tonnes over 5 years. And what we're looking to do and what we've done is to grow that resource base. We've taken this resource from about 12 million tonnes up to nearly 30 million tonnes. So that now puts us in a strong position to really have a much longer mine life and a bigger production rate. And this project's got that history of mining. So it made a high-grade concentrate to 28 to 31% copper. Geotechnically, it was right, had the permits, had the water, had the access, had the support. So that puts us in a really good point, and now that we've built that resource base up. We're in Arizona, it's tier 1. I'm going to talk about why that's important in a moment, but what we're focusing on now is doing our scoping studies on the back of the recent discoveries that we've had. And we've also found a simplified pathway for production as well. So I'm going to... So this is where we are. We're surrounded by the majors, BHP, Rio Tinto, South 32. There's a belt called the Laramide Arc, which goes down from the south up into towards Nevada, and that just hosts the big projects. We're amongst the majors. In the US in particular, it's very important that you've got your ground is on patented claims, and we've got all our mineral resources are located around about there. Our tailings dam is located, hang on if I spin that one, sits about here. And that puts us in a really good position for the restart of the project. That's what our mineral resources looks like. There's an underground mine with about 18 kilometres of tunnels. To put that in perspective, it's about $100 million to put that in. It's around the existing resources as well, so that's important. Compared to our market cap of sub $20 million, we've got fantastic infrastructure. These are recent photos. We've been drilling from underground. The pump sumps fans are working. The mines inspectors turns up. We've got mines rescue teams. We've got the works for a future operation. So that is an amazing benefit. This is not a greenfields project. There's over 1,000 holes sitting in this resource, supporting this resource and around the existing development. I had someone come up to the booth the other day and they were asking about, well, what's your tonnes per vertical metre? Well, we've got 2 portals that go in on the side of the mountain, and then a lot of the resource that you can see here, it goes up. So we've got negative tonnes per vertical metre. So that makes it really helpful for lower mining costs because you can put in ore passes, you're not labouring trucks from at depth. But then also from a green perspective, it doesn't need as much energy to be able to ventilate these types of mines compared to deeper mines. You don't have your trucks aren't producing as much emissions, or if you start going down battery electric trucks as well, which should work really well for us, then there's 0 emissions from that equipment. So we get really nice high-grade zones, but we get plenty of decent thick zones which are really amenable for lower cost mining operations. If you can see some of these here, there's like 110 metres at 1% copper, 70 metres at 1.6. 90 plus metres at 1.35. So you can start getting in big tonnes, big stopes, which is perfect for what we want to do. But there's a lot more to be found. We've got nearly 30 million tonnes in our resource at 1.35% copper. The silver and gold added about 20% extra value historically, but we feel like we've just scratched the surface. This pink zone that you can see there, so that's the outline of the current resource, but all these areas here are still open. So there is a lot more to be found still on the patented claims. This is an example. There's an old mine. There's a number of old historic mines on our claims outside the resource. As you can see what they look like. And there's some of the grades there, 3% copper, 2.5%, 4% copper. There's some really nice grades there outside the resource. But at this point, our focus is let's get the study done. We can show how much money this project's going to make. And we know that this will go for another 5 or 10 years after the initial mine life. If I spin around to the other side of the project, over about a 7-kilometre strike, the copper mineralisation continues and extends on surface. It's quite extraordinary. These are big systems that you get in Arizona. You can sort of see some of the grades here are nothing short of spectacular. 4 to 10% copper, outcropping on surface with a geophysical anomaly dipping back into the mountain. So, the point is, well, where do you target? There's so much to be found. Our scoping studies is well underway. That's due in Q3 this year. We're particularly focused on finding a simplified pathway for processing, and we've had some great success on that recently using glycine, just out of Curtin University here of all places, which is really exciting. We got plus 90% recoveries of our sulfides, which you might think that sounds a bit strange, but yeah, sulfides, because we've got a lot of bornite and chalcocite, it leaches. Unlike most copper projects in the world, chalcopyrite, which is notoriously hard to leach, we've got a lot of bornite and chalcocite. So we've got different minerals, so that makes your processing plant a lot simpler. You're not going through smelting, refining, you can go straight through to SXEW for a smaller plant. These are our key milestones. Scoping study now will move on very quickly to the pre-feas and look to get into the early operational works around about 2026. I'm going to touch on Silver Mountain because this is a really exciting project. This is the one up north of Phoenix. It's where the major porphyry system aligns with the VMS system and the two major systems collide. And we've got some extraordinary grades on surface, and we've got a lot of smoke as well for a big mineralised system. There's outcropping pegmatites, there's pebble dikes, there's a lot of veining similar to what you see in Baghdad, big major mines, but there's a lot of little operations with some phenomenal grades. So 80 gram per tonne gold, 11% copper, outcropping on surface. So we've got guys on boots on the ground as we speak, mapping, preparing targets, which we'll use for future drilling. Corporately, got about 300 million shares on issue, so still pretty tightly held. Charlie Bass, who I mentioned at the start of the presentation, owns about a third, very, very supportive of this project. We had about $500,000, but we're doing a rights issue as we speak. So I do encourage you that if you're keen to take up some shares, to come and get in contact or to talk, have a look on our website as well. Thanks very much. In summary, 2 projects working towards production, copper, really good funding opportunities, some great grades, an existing underground mine, and we're working towards a restart. Thanks very much.
Well done, Tim Mason. I thought I'd stolen a few too many seconds of your time. You've done very, very well. Ryan. I didn't want to be in trouble myself. All right, Robert Ryan, Rox Resources. Come on up here, sir. You're looking very dapper. Got your best suit on. You had a big day yesterday, by the sounds of things. It was a bit loveless on the ASX across the board as far as resources go, but you guys did really, really well. So tell us all about it. Would you please make him very welcome, everyone? Rox Resources.
Thank you for the introduction. So yes, we did have a good day yesterday on the ASX. We released some geophysical results at our Mount Fisher project, and it shows that what we have in our suite at Rox is not only an outstanding gold asset at UME, but we also have some outstanding exploration assets also. So in 2024, that is our key focus, is to advance this UME gold project. It has 2.3 million ounces of gold at 4.4 grams a tonne. This is the highest grade junior gold developer on the ASX at this point in time, now that Bellevue luckily have moved into production. Importantly, we've increased the indicated component of this resource by 48% in the underground, which will form the key part of our studies moving forward. We're expecting that we'll be able to get a 700,000 to 800,000 tonne per annum style underground mine out of this operation in the future, and that'll go a long way to really establishing ourselves as a potential for a mid-tier mining company. The pre-feasibility study will be due out in June, and that'll highlight the high-grade nature of this project. Met test work is underway now, and we're looking to produce a high-grade gold concentrate, or whether we go down the path of doré on site. We've got regional and near mine exploration opportunities also. So the near mine exploration target of 1 to 1.8 million ounces highlights that this is a significantly mineralised system. We understand the structural architecture of this project, and we spent a lot of time developing our understanding of this ore body, and now we're ready to exploit that. The regional area is still coming together, and now we have 100% ownership of what is a highly prospective gold belt. It has allowed us to look at further opportunities outside there. We're also looking at alternative funding opportunities to minimise the dilution for our shareholders, with the ability to potentially offload or sell an interest in some of our exploration assets. The project's located about 120 kilometres southeast of Mount Magnet. Actually, Penny West Gold Mine sits about 20 kilometres south of us. Ramelius, actually, haul trucks go between our camp and our operation. So when we have a look at this area, there's a lot of infrastructure in place, and this is a belt scale style resource. We have a strong shareholder base. Hawke's Point are a 10% shareholder. They've been a fantastic supporter of the company and continue to support the company. They have a lot of technical expertise also that we are able to leverage off to help advance our knowledge of the project. The board and management have experience in taking operations through the feasibility process, through the funding process, and getting operations into production. The resource is 2.3 million ounces of gold at 4.4 grams a tonne. Importantly, the underground indicated resource is 2.5 million tonnes at 6.1 grams a tonne for 1.1 million ounces. This is a significant resource. This will provide a long life asset as a potential underground mine. We've significantly improved the confidence in this resource. We've been drilling out the indicated component with our target was to convert around 200,000 to 300,000 ounces. From the underground component of resource, we actually converted 360,000 ounces. That shows when we drill this resource, we will grow it and we will improve our understanding and we'll continue to advance this project as we move forward. If we look against our peers and companies with that sort of sub 200 mil market cap, a lot of our competitors within this space, our grade stands out 50% higher than most of our peers. This is a high grade gold development. It has scale, it has 2.3 million ounces. This will be a mine. And when we look at the ounces per vertical metre, we're talking 4,000 ounces of vertical metre at this operation. That starts dropping off below 400 metres as soon as the drilling density falls off. We know that as soon as we drill, and some of the holes that we've got, the deepest holes that we've got drilled to date at this project, still run at 16 grams a tonne plus. The deepest hole in main lode is drilled about 950 metres below surface, runs 16 metres at 16. The deepest hole we drilled at Link was about 450, 500 metres below surface, and that ran 22 metres at 12. This is a significant resource, and now that we understand the structural architecture of the region, we have been able to develop an exploration target to further advance this. The pre-feasibility study will look at advancing this project through into production. The idea will be is we'll go through a mine planning process now. We'll out for RFQs. We've spoken to a few contractors already at the conference who are bidding on the project. The idea is we'll get that pre-feasibility study done and complete in June, and we'll further look to advance the project from then on. The exploration strategy has been simple. First, we need to consolidate the asset and get 100% ownership, and we did that last year. We then had a look at some near mine opportunities, in which really turned up some highly prospective areas of Midway and Paddy's and provided potential for significant growth at the resource. We then had a look at some of the regional areas in around Curran's Find and the like, and we've had some really good exploration results out of there as well, highlighting the potential for future discoveries along that 60 kilometres of gold belt. And understanding, as I said, that structural architecture of the UME district, we know that we have these east-west faults offsetting the main lode mineralisation, and there's about 6 mineralised lodes within that UME shear zone. Now, when previous drilling has indicated that potentially mineralisation had been cut off by the faulting, we know that it's been shifted probably 20 or 30 metres. We've drilled deeper and we've intersected high-grade mineralisation on the other side of those faults. What that's now given us the ability to do is highlight the exploration target in this area. Now, if I look at the top 400 metres of the project, of that 1 to 1.8 million ounces, there's probably about 1 million ounces in that top 300 to 400 metres. They are low discovery cost ounces that we can look to further grow the project and further grow the production profile as we move forward. The Link and the main lode. This is a great comparison to see the drilling potential at the project and see the potential for expansion. You will see main lode previously mined down to about sort of 600 metres. The resource goes down to about 800 metres. The depth of drilling sits around here. So we have a look at Link. Link, so far, previous operations only mined really high up in their ore body and didn't actually complete any stoping. They moved out due to low gold prices in the mid-1990s. Here now we have the ability, we've expanded the resource all the way out to around sort of 500 metres below surface. Our exploration target sits a bit over 600 metres below surface, and the deepest drilling, as I said previously, on the main lode sits 900 metres below surface. We know when we have the structure, we know when we have the correct geology, that we get high grade mineralisation here. So I've got no doubt as we continue to expand and we enter into operations that this mine won't have a 7 to 8 year mine life. This will be going for 10 years plus. We have a number of near mine discoveries at Midway and Paddy's. Now, again, understanding that some of these mineralisation was previously offset to the south, there wasn't a lot of drilling. There was drilling along strike from the known gold resource, but there wasn't a lot of drilling further out to the east. Now, these fault offsets have shifted the mineralisation up to 100, maybe even 200 metres further to the east. That's where we hit Paddy's lode initially. We've expanded that out so far. We've got it defined over about a 200 metre strike. Mineralisation probably starts about 150 metres below surface. So this will be a fantastic opportunity for a future underground drive as well. It is close to existing development. With our pre-feasibility study we're working on now, it probably sits about 100 metres from a proposed decline that we're putting in. Midway sits out in a hanging wall, looks to be a linking structure between two shear zones that run between Bunker and UME. A lot isn't understood about these linking structures, and as we've continued to build out in around Midway, it is turning into quite a defined high-grade zone that's probably running similar again. We've defined it over about 150, 200 metre strike over mineralisation probably starting at 150 metres below surface. So what we are finding here at UME is once we've moved off the granite contact on the main UME shear zone, the high-grade mineralisation tends to start a lot deeper. And as we continue to drill and understand this ore body, we'll continue to make more discoveries. Cones, we had some good drilling here last year. We found, this is just north of Ramelius Penny West operation. There's a number of east-west style trending mineralised features. The interesting thing to us is we want to have a look at potentially finding the source material on the north-south structures running in between here. There's a lot of work happening to try to understand this system, and we'll continue to look to drill and follow this up because some of those grades are just immaculate, running 3 metre widths at sort of 30 grams a tonne. Something that sort of come across our desk late last year, we had a joint venture partner, Venus Metals. They defined a really high-grade lithium anomaly and took a whole heap of rock chips and got about 4.5% lithium. We've got the gold rights for the underlying tenure. They have the sort of lithium and other mineral rights. We've got a tenement to the south where we have 100% ownership of all rights. We then thought, well, we're not drilling. Geo's got a bit of time on their hands. We've gone out, we've gone into the field, completed a whole heap of mapping and soil sampling just before Christmas. And that's turned up quite a significant lithium anomaly. What we have there at the moment is about 12 to 13 Ks of tenure that displays quite high-grade lithium anomalism in soils. Whilst we're not drilling at present, we are going out there on the field and we've just got the boots on the ground, doing more mapping, more soil sampling, infill rock chip assays, and really trying to define what the potential of that lithium anomaly is. That has the potential, as I said before, of allowing us to help fund this project and continue to move it forward. Similarly at Mount Fisher and Mount Eureka, as I said, we released the geophysics here yesterday, highlighting that along strike from what are known gold resources and pretty high-grade gold resources, that there is a significant potential to expand those and to effectively have greenfields targets. This is an exceptional exploration opportunity. When you've got 2.3 million ounces of gold at 4.4 grams a tonne at UME though, it makes it hard to justify significant exploration spend to advance this. We are actively seeking potential to offload the asset and be able to use that to fund efforts here at UME. So why invest in Rox? And I guess like most other gold developers here at the conference, everyone has had quite a tough time in the market over the last 3-6 months. Gold price is at record highs. We are seeing a number of mid-tier miners churning out millions and millions and millions of dollars of cash every month. We are seeing M&A activity starting to hot up in the sector as well. The junior gold sector is probably the most undervalued it's been in the last 10 years. There is the potential for investors to make a lot of money following good projects, and when you have 2.3 million ounces at 4.5 grams, it is one of the highest grade projects available at this end of the market. We've got a number of near mine discoveries that we'll need to look to continue to advance the project. We'll push this towards pre-feasibility study and we'll show the true value that this project will have at these record gold prices. Thank you for your time, and hopefully I've just beaten the clock.
Well done. I'm not allowed to give anyone chocolate today. I think that's wrong, but I'll keep it myself and eat it. Maybe that's right for me. All right, but I've trained you really well yesterday, so I'm very impressed. Gareth Sully, hello, MD extraordinaire. You've got 3 big areas that you're focused on, one of them in particular. So if you know where, is it Paraburdoo? Mm-hmm. So about 180 kilometres west of Paraburdoo, this young fella here is... boots on the, well, you are younger than me, your boots are on the ground, things are going a bit crazy out there. They've got mining contractors, equipment, things are ramping up as you put things back into play for that big facility out there to do some crushing. Is that right, of your own?
We're going to get it, absolutely, Chris.
Tell us more, what's happening with the Black Cat Syndicate? Please make Gareth very welcome, everyone.
Thanks for that intro, Chrissy, and good morning, ladies and gentlemen. Pleasure to be back here and presenting at another RIU Explorers Conference. I think it will be a good year for gold, and thanks to Rob for all his talk. He did a good job. And it's going to be a great year for Black Cat. And as Chrissy said, and as the title of this slide is, we are currently refurbishing Paulsens, which does mean that we'll be back in production and producing gold later this year. I'm assuming everyone knows about Black Cat, but maybe there's people that haven't been to Explorers before. We have been around 6 years. We've been here most of those years as well. We've got 2.5 million ounces of high-grade gold resources spread across our 3 projects. And they're very high-grade, just like Rob before us. In fact, we've got 2 of the highest grade underground resources in Australia, being Paulsens and Coyote. So for us, we've got installed infrastructure at both those sites. We've got permitted sites to build mills at Kalgoorlie as well. So we've got 3 projects, all very near production, and we're looking forward to getting them going. We've got funding coming in, and I'll talk to that in this pack as well. And that allows us to get Paulsens up and running and producing gold this year. And we'll use that internal cash flow to sequentially develop the other 2 projects and eventually be producing at around 150,000 ounces per annum. So all our projects are regionally very strategic. They're the only processing facilities for gold in those areas, and we'll leverage off that into the future. So here's the 3 pillars of the company: Paulsens, Coyote, Cal East. All have good endowments of gold, large tenement holdings, great discovery potential. We've released studies on all of these. We've got initial production targets set for each one. And they're all producing sort of 200,000 to 300,000 ounces of gold over a 4 to 5 year mine life. Obviously, these mines have operated for typically longer than they've got current mine life, and that's the nature of these high-grade gold mines in Western Australia. Right now, we're refurbishing Paulsens. We intend to upgrade and refurbish Coyote, and we intend to build Cal East from the ground up. And therefore, we need less capital for Paulsens and more capital for Cal East, and that's why these are sequenced 1, 2, 3 from lowest capital to highest for us. All produce good cash flow and all have good all-in sustaining costs. From a corporate point of view, 306 million shares on market, some options, some performance rights there for employees predominantly, about 60 to 70 million market cap at this point, 8 million in the bank at the end of December, some more came in January. Northern Star still owed 10 million, but over the next couple of years, so nothing urgent there. Top 20 holders have about 41% of the stock and directors hold about 10%. Those directors are Paul Chapman, Les Davis, founding directors of Silver Lake Resources, with Tony Polglaze from Avanco fame, myself, so there's 3 guys with lots of experience in grey hair, and myself on the board, but all of us have experience starting gold mines, as does the rest of the management team. In terms of funding, we've got $60 million coming into us this year. 9 million of that is already in the bank account, and we're using that right now, ordering long lead items and doing early works in the mill. We've got equity placements of 36 million to 2 Chinese groups. They'll get 16% of the stock each. We're waiting for FIRB and Chinese regulatory approval for that. We expect that to come in over the next few months. We also have 15 million in debt coming from one of those groups with good payments, low interest, very friendly for us in terms of our startup. So what are we doing with that money? Well, we're restarting Paulsens. Paulsens is, of course, the operation that kickstarted Northern Star, took them from an explorer to a producer, gave them lots of cash flow. For us, we think it'll do exactly the same thing. We've got a fantastic tenement package here, very much underexplored. We've got a well-maintained 450,000 tonne plant. It does need refurbishment, and we've got the capital coming for that. Dewatered, ventilated underground mine, it is important. We have been underground drilling less than a year, but we've grown the resource from about 80,000 ounces when we took ownership to over 400,000 ounces at the last published resource. It is the only plant within 400 kilometres, gold processing plant. There are other interesting gold deposits in the area, and we'll leverage off that in the future. Paulsens has produced 1 million ounces in the top 1,000 metres from surface. We've got another 400,000 ounces up and around that top area, as well as the start of the extension of Paulsens. On top of that, we've got Footwall Gabbro Zone, which is loaded with gold. We've got that part of that in our mine plan now, and there's going to be a lot more mining in that area. The eastern zone, very much under-drilled, and the Paulsens repeat is an untested target. The geophysical target defined after the mine closed, when Northern Star spent $2 million on that. There's a lot of scope for additional ounces to come out of this. We've got a 4-year plan here already, and this mine will continue to grow into the future. Here's the metrics of the study. I won't go through it all in detail, but I will point out that we did publish a study in July. Then we did a few more months drilling, and we published another study in November. And we added an extra year and basically improved every metric by sort of 30 to 40% with only a few months drilling. And that's the nature of these ore bodies, and this particular ore body, especially if you drill it, you'll keep growing the mine life. And that's what you saw in the history of this operation. It only ever had a very short mine life. That operated for 13 years. We'll keep doing this. And there's gold everywhere here. So we've got plenty of gold in our current mine plan, which is based on our current resource. And then there's a whole heap of gold that's not included in a resource. We haven't been able to drill it, but it's hanging out of the walls. So our intention is to go and mine a few of these areas as we start up. They'll produce high-grade additional feed tonnes, which are outside of our mine plan. Of course, that will increase the cash flow, reduce all-in sustaining costs. The mill is not full, so we're only operating the mill at about 80% at this point, based on our current mine plan. So this is upside. So where are we at right now? We have started our refurbishment, and as Chrissy said earlier, we've run up the crusher. The guys are probably running buckets full of dirt through the crusher at this point. But certainly we've got the key people in place. We've got management, we've got the maintenance people. We're doing the early works right now. We're ordering long lead items. And that's going to debottleneck the rest of the refurbishment once we get going. That will happen once we get the funding in. So over the next few months, we get the funding in, then we'll commit to the full refurb, the mining contracts, etc. And we do expect that it's a 6-month process from full funding to getting first gold. So that's why we'll be expecting first gold in the second half of this year. A few happy snaps from around site. As I said, the guys have run up the crusher, ordered the steel for the tanks, tested all the motors and agitators. There's not many that are broken, and we've got stock in the store to replace. Got motors, ordered the long leads for the mill, ripped the Nelsons out already. They'll be stripped, and we'll use spares. Belvedere is in our mine plan. It's about 20,000 ounces to our mine plan, so it's not huge at the moment, but it's only a 30,000 ounce resource anyway. It's 5 kilometres from the mine, and it's got a huge potential. We've been doing some exploration drilling further along strike, very greenfield sort of work, but there's a 2.5 kilometre strike with historic workings along this fault zone. We think there could be repeats of high-grade shoots that could be added to the mine plan in the future, because Belvedere clearly will work. And there's lots more potential here. So Paulsens and Belvedere are up the top of this image, but we've got a large land holding. We've got other targets that maybe look like Paulsens did prior to drilling ever happening that haven't been drilled. There's good potential for other base metals and other commodities on this lease package. And we've got a 2.5 million ounce exploration target, because clearly this is not going to be the only million ounce gold deposit down here. One of the interesting areas for the geos, a bit different from just straight gold, but there's certainly precious metals down here as well as critical minerals, is Mount Clement. And we've just added some extra tenure to the south of Mount Clement in the Bullaloo acquisition. So this is a copper gold sort of area, and obviously there's the antimony kicking around as well. I'll quickly nip up to Coyote while I've got time. Again, this is a brilliant high-grade deposit. It's up in the Tanami. It's along strike of the 20 million ounce Cali deposit. Here we've got the only processing plant within a 200 kilometre radius. And this is a good bit of kit, good bit of infrastructure that would be hard to build again in the future. We'll just have to upgrade this and refurbish it and get it going. So this makes for an easy second project for us as a company after we've got cash flow coming out of Paulsens. So we've published a scoping level study here. We'll have to upgrade that again going forward. But that does show that there's good cash flow, low all-in sustaining cost, and certainly lots and lots of upside. It's a very high-grade resource. There's a lot that is not included in the resource here at Coyote. But the 15-gram underground is the jewel here, and that will be the focus, and that will continue to grow. We've excluded a fair bit of the underground from the study so far, so there's a lot of upside to come. Cal East is where we floated 6 years ago with about an 80 square kilometre tenement package and no resource. We spent our first 4 years looking at this project, growing it, and we've got 1.3 million ounces sitting within 50 kilometres of Kalgoorlie. We took this to the point of getting the approved mill site for an 800,000 tonne per annum processing facility. So that's out the road at Majestic between Mount Munga and Beerlong. So that's all ready to go. Obviously, it hasn't been a great time to be doing a new construction around Kalgoorlie, and we've got lower capital startups at Paulsens and Coyote. But this is a great project. It's de-risked. It's got a PFS. It's got good cash flow. There's 700,000 ounces in our portfolio at the moment that has not been included in the current study, and there's a huge amount of discovery success to be had out of this large tenement holding. So this is a great third project for us. Obviously, there's a few changes around Kalgoorlie at the moment. This may come forward in the project pipeline, but at the moment, Paulsens is our number one. Once we're operating, obviously, we can be re-rated as a junior miner. You can compare all the junior miners and compare their enterprise value per production ounce, take an average. We'll get a re-rate. We should get a lift once we're in production. And our first project will be producing somewhere around 50,000 ounces. Second, maybe have 100,000 ounces production, and the third at 150. We should easily increase shareholder value through this method. So I'm ahead of time, Chrissy, but I got you first. So clearly, you know, we've got 2.5 million ounces of very high-grade resource, 3 projects which will all be in production at some point in the future. As a junior, you know, we've got 3 projects which will all be company makers. We've got all of them in our portfolio. So we'll start the first one. We don't have to go and acquire the second one. We've got that already there. But they're high grade. We've got the funding in place to start, and we'll be pouring gold later this year. If you'd like more information, got a couple of GOs out in the booth. Please come and see us and discuss. Thanks.
Gareth, I reckon that's the first time you've done that in 3 years. I'm very impressed. And again, if I had chocolate, I'd give them to you, lad. All right, come up here, sir. So we're waiting at the moment, aren't we? We're waiting for government to meet up, their policies to meet up with what our outlook is for uranium at the moment, I suppose, to uranium markets to align. So our next company up on stage is certainly working hard in the background to make sure they are maximising the potential of all their projects for when that moment in time eventuates. So would you please welcome up to the stage today, we've got from Toro Energy, Richard Homsany. Richard, welcome.
Thank you, Christy, and thanks to Vertical Events for inviting Toro Energy to present at this year's conference. And good morning all. So for those of you who don't know much about the Toro story, we are an advanced uranium company. Our flagship project is the Wiluna Uranium Project in Western Australia that has 62.7 million pounds of U3O8 and 68 million pounds of vanadium pentoxide. On our uranium tenure, in the bare years for uranium, we made some substantial nickel discoveries and we made some encouraging gold discoveries. So all of this ground was within the Toro portfolio and we made those discoveries. So there's a great business case to demerge those other metals from the uranium and vanadium business. We also have a joint venture interest in Namibia with JOGMEC and Deep Yellow. And we also have 28 million pounds outside Wiluna in exploration projects within Western Australia. Our board is comprised of very experienced uranium people. I've had over 2 decades experience in uranium, either executive or non-executive experience. Richard Patricio is the director of NextGen and chairman of ISO Energy in Canada, which contains substantial uranium projects. The best undeveloped uranium project in the world or yet to go into production uranium asset is in NextGen. And Greg Shirtliff is an ex-Cameco employee with over 2 decades experience. And Michelle has been involved with Toro and uranium investments for over 10 years. The important point to note here is that our market capitalisation is just over 50 million and we have 15 million in the bank, so our enterprise value is quite low. And there is a compelling opportunity to jump on board Toro as an investment and reap some short-term returns with what we've got in store. So overall, we have 91 million pounds of uranium. We do have an environmentally approved project with one condition that needs amendment retrospectively, a substantial commencement condition. 1 of 4 projects met that substantial commencement condition in Western Australia once the government changed back in 2017, the state government. We were unable to dig a hole because our uranium mineralisation starts from surface. So that option of substantial commencement was highly constrained for us because we couldn't do any earthworks as such without actually starting to mine uranium. So we were in a bit of a bind. But the point is that, and for those who are AFL inclined, this project was permitted in 2016 by the feds and 17 by the state when Adam Simpson was the coach of the Eagles. And Adam Simpson is still the coach of the Eagles this year. For how long remains to be seen, but he is. So this wasn't a project permitted decades ago when Gough Whitlam or Malcolm Fraser were the Prime Minister. This is something that was permitted literally only yesterday. So we are an advanced asset that has gone through rigorous assessment by government
We're not an exploration asset. We are heading towards production. We will work adjacent to current government policy, but we're not going to let current government policy dictate the development of this asset. We are committed to getting it production ready. So from an investment perspective, we seem to be heavily penalised for not having a favourable state government policy at hand. So what I would urge you as a potential investor or a current shareholder to look at is, when do you think any uranium project in the world or any uranium project in Australia could get up from here? If you take the view that it won't be till later this decade or even 2027 onwards, then you've got to ask yourself, do you think this current government policy will be in place in 2027, 2028, 2029? And with that in mind, ask yourself whether an enterprise value of 35 million is justified for Toro. We have 3 deposits within Wiluna: Lake Maitland, Centipede, Millipede. Lake Maitland has a uranium joint venture partner with reputable Japanese partners, Japan Australia Uranium Development Company, which is a syndicate of nuclear power companies out of Japan, and Itochu. So Lake Maitland, which is about 80, 90 kilometres to the south of our other 2 deposits, Lakeway and Centipede and Millipede, because of the distance and because of the joint venture relationship, we did a scoping study for that project, and we calculated an NPV of 610 million, a low capex, rapid payback of 2.5 years, and outstandingly low costs, both C1 and all-in sustaining. Our all-in sustaining number of $28 US a pound of U3O8 is an excellent number. So we are moving towards production. This isn't an exploration company. It has an exploration arm, but our core business is to move Wiluna into production. We will develop a timeline for the development of Lake Maitland. We have work streams underway in preparation to launch a DFS in about a year's time. One of those work streams is to commence a pilot program at a rigorous level, something that will stack up at feasibility study level. We hope we can get a small increase in the resource. We hope we can get a small increase in the recovery. Either way, signs are looking good that this project will make a lot more than the 610 million NPV at Lake Maitland. At Lake Maitland, we will produce 23 million pounds. Look, I'm not going to go into the uranium sector. We all know that the spot price is hovering around $100, and it looks like we've got higher prices for longer. At Wiluna, as I said, it's Lakeway, Centipede, Millipede, and Lake Maitland. We did a Lake Maitland pit optimisation based on a revised flow sheet. We spent the last 7 years developing a revised flow sheet, and we've generated what we think is an extra $620 million US in gross product value. We've got a substantial uplift in our uranium production out of Lake Maitland. Before, we were only going to mine the red part of that map. We are now going, we will stack up at DFS, hopefully. We will mine the red and the green part of that map. So Lake Maitland, one of 3 deposits that generates that large NPV, we are doing a refresh of that scoping study, which is now about 15 months old, 16 months old. And that number, based on current pricing and exchange rates, will go up substantially. We hope to be in a position to release that soon. So that's the first bit of news, along with some news about the pilot program that'll come out in the short term. So we're looking at a 17.5-year mine life, producing 1.3 million pounds of U3O8 and 0.7 million pounds of vanadium annually. As I said, we spent the last 7 years working out an improved processing flow sheet, and there are many benefits from that flow sheet, but the biggest thing is we've reduced a couple of capital intensive items. We've reduced the CapEx, we've reduced the OpEx, we've reduced the size of the project. The leach tanks are now smaller. Because we're able to beneficiate the ore and upgrade the product, get rid of the waste, that material now, and get rid of the clay, that material becomes porous, which means we can wash it and remove the salts, which means we use much less reagents in our chemical processing circuit. We then can move to ion exchange as a result and liberate the vanadium. The vanadium doesn't make the difference in whether this project is economic or not, but it's like cream on the cake and makes a significant contribution to CapEx over the life of the project. We made some nickel discoveries on our uranium tenure. Our best nickel discovery is actually on Lake Maitland at Dimmer. We're in Yandal country, so that means we're in gold country, a prolific gold mining district. We've got some encouraging gold results. We haven't drilled below basement yet into the fresh. So as I said, there's a compelling case that as a shareholder of Toro, you will receive an in-specie distribution of a share in a new company based on the gold, nickel, and other mineral assets of Toro in the near future. What's going to propel us going forward? Because of the work we've done at Lake Maitland, one of 3 uranium deposits, we haven't financially or technically evaluated the other 2 deposits, Lakeway, Centipede, Millipede. We are doing that now, and we'll continue to do that this year with the healthy cash balance that we have. So we're looking to maximise the financial and technical feasibility of Wiluna as a whole. It might be that Lake Maitland is a standalone mine, and Centipede, Lakeway, Centipede, Millipede, and Lakeway are a mine of their own. The permit that 4 companies went out and rushed to get a permit for before the government changed. For us, the project that was permitted at that time is not our optimal project. In the 6-7 years that we've spent doing research and development since the project was permitted, because of the change in the processing flow sheet, we need to amend our permit anyway. So we've got a project that'll make a lot more money, and we will go to the government at the appropriate time and seek the amendments to approvals that we need. As I said, the refresh of Lake Maitland and the pilot plant work, we've got 28 million pounds of U3O8 in exploration assets. We could reinvigorate our exploration ambitions. And the thing to note is the uranium market is strong and will continue to remain strong. There's nothing foreseeable from either a supply or demand side that will see the structural deficit that has emerged abate. So uranium prices are here for longer. As the uranium is only 2 or 3% of the cost of producing nuclear fuel, it's also demand inelastic. Like whatever the cost of uranium is, no one's not going to buy uranium because it's too expensive. And the reality is the increase in the uranium price that we're seeing isn't even really demand-led, right? The true demand is yet to come. So the best is yet to come. And even for Toro, our best version of Wiluna is yet to come. Yet we only have an enterprise value of 35 million because we've got a current government policy that is not in favour of uranium. Just quickly in conclusion, this is a statement by Roger Cook, which is basically confirmation to you that obviously he had an energy transmission summit and he's thinking about our energy needs here in WA, given Synergy makes a massive loss every year. But Toro's fortunes, any uranium explorer or miner's fortunes do not depend on Australia becoming a nuclear adopter. It's very important to note that the world wants uranium and the demand hasn't really even flooded in yet to really boost the price. So our friends in Japan on the 1st of February declared uranium to be a critical mineral because of energy security reasons, the Russia influence. So it makes a place like Australia a very attractive place and somewhere where you would pay a premium to secure supply. But it doesn't mean that Australia has to adopt nuclear energy as part of its mix for us to be successful. We have Japanese joint venture partners at Lake Maitland and other people that are really keen to get rights over our product. With the current situation with nickel and lithium and the short-term outlook in those minerals, with a government that, you know, has to really look at energy needs, the cost of energy in this country, there is an opportunity here for the uranium to be a topic, and uranium exploration to be a topic worthy of discussion in WA. When uranium was lower than $40 US a pound, it didn't really matter whether there was a supportive government or not. But given Lake Maitland and Wiluna will generate an NPV well in excess of $1 billion after tax, I'm pretty confident throughout the course of this year we will show you that. It's an important question the government has to address as to why uranium is best kept in the ground. You've seen that Roger Cook say he will support the decarbonisation efforts of other economies. Well, uranium is a key plank in that. With GOP, you saw over 20 countries over 4 continents committed to triple nuclear capacity by 2050. It shows that the future for uranium and Toro is strong. Thank you all for your attendance today. Thanks, Chrissy.
Always a little bit wary about approaching such a passionate man, and he's definitely passionate about that. Got some very, very valid points to make. All right, Legend Mining, come and join us on the stage. They've got a bit of a spring in their step because they've had a nice little windfall from the taxman, which sounded fairly fabulous. They've also had some windfall, some little good bits of news as well with their loops. What do you call your loop flying?
Oh, the fixed loops.
Your fixed loops.
EM, I'll
I
talk
like
all
that.
to that.
That's an impressive bit of tech. Are you going to go into that during this discussion?
I absolutely am.
Excellent. Okay, well, would you please make welcome Oliver Kiddie, who is the Managing Director for Legend Mining.
Thanks, Chrissy. Good morning, everybody. Thanks for coming along to listen to the Legend story. Thanks to Jackson and Stu for the opportunity to present the Legend story again this year. Always like to lead off with a bit of a gag slide, and it's a pretty easy one this year, given the negative nickel sentiment. You only have to open a newspaper to see that nickel is very much on a downward spiral at the moment, but I think that's probably a best example of an investor trying to weather the nickel market at the moment. My talk today is around Legend and how Legend is navigating this negative nickel sentiment. I will be making some forward-looking statements, so please take time to read the disclaimer. A quick overview of Legend from our corporate level. We've got a current market cap of just north of 49 mil at 1.7 cents. I think today we touched 2 cents, and we've seen some buying in Legend over the last 10 to 14 days, and I'll explain why. Nominally, it's too cheap. Our cash position as of the end of December was 11.6 million. You can add another 3 million to that, as Chrissy touched on. We've received our R&D rebate, so that puts us in a really, really strong cash position going forward to weather this downturn in the nickel market. Very importantly, no debt. Our shareholder structure, 63% of our top 20 is owned by 63%. Our top 4 own 54%. Our major shareholders are Mark Creasy, also a joint venture partner, and IGO at 12.9%, also a joint venture partner. I talked to, being cheap. All those directors listed there on screen, starting with Hilary McDonald, then myself, and most recently in the last week and a half, Mark Wilson, our chair, and Tony Walsh, our co-sec, have all bought on market. So we're genuinely backing ourselves. The investment highlights for Legend, we are, and we don't shy away from, being a dedicated nickel, copper, cobalt explorer. We've got a dedicated team of science-driven explorers, and I'll talk to that science today during the presentation, with a track record of discovery. So Derek Waterfield, our EM, he's in the audience today and he's at the booth, so please come along and have a chat to Derek. The tenement location, we've assembled a great tenement location in the Fraser Range, north of Nova Bollinger. The only 2 players in the belt are IGO and Legend. The Mawson mineral resource, I'll spend a bit of time on that today. That's a really strategic resource and definitely a foundation to grow. We think it's far from finished there, and we've got some compelling evidence why. We've got a pipeline of targets in our ground in the Fraser Range. Octagonal, I will focus on today, which we think is a real sleeper. And well funded, like I touched on, north of 14 million. in cash. And as I always touch on, 90 cents in the dollar goes in the ground at Legend. So why the fall in nickel? I think if you would have missed this, the only way you've missed this if you've been sleeping under a rock. You open up a paper, like I said, and it's all about the negativity around nickel. So what is driving that negativity and the fall in the nickel price? Well, it's been an increase of supply of this class 2 nickel from Indonesia, coupled with this lowered uptake of EV demand. And that's resulted in that third bullet point there, which is this surplus for nickel being pushed out by another 2.5 years to 2028, when we're going to see it in deficit. And this deficit is where it becomes really important. This looming deficit from 2028, is it all going to be filled with class 2 nickel in a decarbonised future? And that's a big question. You can see there's a lot of talk around bifurcation, and will bifurcation happen? Unsure, but there's a big political push for this bifurcation to take place between carbon intensive derived nickel and sort of ethically green supplied nickel, which is the sulfide producers here in jurisdictions like Western Australia. This is a really, really good slide, and it talks to that deficit, that looming deficit in 2028. Where are these discoveries going to come from, these new nickel discoveries? The discoveries, as you can see there from that graph, they've effectively dropped off a cliff since 2010. And the next big nickel discoveries are going to occur in these underexplored terrains, like we are in the Fraser Range, these underexplored, undercover terrains where you've actually physically got to apply some genuine science and thinking, roll up your sleeves, have a bit of grit about you to explore for these style of deposits. But I think the third point on this slide is the most pertinent. Regardless of the nickel headwinds, a quality class 1 sulfide asset produces good money. A perfect example of that is Nova for IGO. In their December quarter, some 40% of their EBITDA for the company has come from Nova Bollinger in the quarter. So that just shows they're mining lower grade stopes at the moment, and obviously higher cost at north of $4 a pound production cost. They're still printing money out of that. So a good quality sulfide asset does print money. One of the things that I get, I've shown this graph to a few people and a fair few investors, and they're all very much like, they say to me, WTF, we're the fines. And that's pretty much where Legend comes into the equation. Like I said, we're in one of these underexplored terrains, being the Fraser Range, east of Kalgoorlie. The Fraser Zone sits 250 kilometres east of Kalgoorlie. We're primarily exploring for these nickel, copper, cobalt style deposits, which I touched on. And as always, I like to touch on the infrastructure here. You can see in the southern portion of our tenure, you've got the Trans-Australia Railroad linking up to Kalgoorlie, down to Nickel West, the Kambalda concentrator, and down to the Esperance port. So the Mawson deposit is a mere 30 kilometres from that railroad. The Rockford project itself, like I said, we've got 2,500 square k's in what we believe is one of the most underexplored nickel belts in the world. The Legend team has displayed the ability to find these mineralised intrusions and convert them to resource in the case of Mawson. We believe there's more to be found, and that's our job, and that's what we're doing with our systematic exploration. Completely science-driven. There's no outcrop in the Fraser Range. So you're compelled to roll your sleeves up, like I said, get into the geochemistry, use all the tools at your benefit, including seismic, which I'll talk to try to find these haystacks and then delineate the needles which we're looking for, which ultimately would be a next Nova Bollinger. The last point on that I will touch on is the rationalisation of ground holding. Anybody that's followed the Legend story over the journey for the last 7 years would know that we had over 3,000 square k's now. We've started to shrink that, and that's been a deliberate act. As we've worked through this project, we've been able to upgrade some ground and downgrade others. So therefore, we're reducing our footprint and conserving capital. I'll touch on Octagonal firstly. This is our project that we spent. This is our project that we spent most of our time on in 2023, namely targeting a an eye-shaped feature which sits on that red line on the screen there, which comes up the western side of the Fraser Zone. That structure links Nova, Silverknight and Octagonal. So Nova and Silverknight are the other two deposits in the belt. You can see there it's an eye-shaped feature for the geos in the room. That's a fold interference pattern. Octagonal, like I touched on at the top, we very much believe this is a discovery in the making, and we're seeing all the right ingredients over the last 12 months to confirm our belief. We drilled 4 holes last year into Octagonal. We confirmed that we're seeing the intrusion continue at depth as predicted by the 3D seismic. Importantly, we're seeing an increase in this higher MgO component and the nickel tenor, which I'll talk to in the next slide. Importantly, we're getting some really good reconciliation between our 3D seismic and the drilling, which gives us confidence to plant these holes in the right spot. You can see all those conductors there in the yellow. They're actually all related to mineralisation or proximal to mineralisation in drilling. These were delineated with a high power fixed loop survey that we completed there in those white squares, white rectangles. We got some really encouraging results, and obviously some conductors on that need to be followed up. But what we did take away was that this survey needed to be extended. It's telling us outside of this, further to the east, through that magenta zone, that this trend continues. So we'll be out there next month, back end of next month, continuing this fixed loop survey with the aim of honing in on targets for the next round of drilling. Like I touched on, this petrology we received literally 2 weeks ago. This confirms what we'd seen in hand sample, that we're dealing with what we call money rocks. So these higher MgO rocks, in this case a leusolite, and you can just see there, you don't need to be a geo to understand percentages. You can see the amount of nickel in the sulfide in these rocks. Our job now is to find more of these rocks and where they focus the mineralisation, but we genuinely think it's a sleeper, and we're seeing all the right ingredients for the next discovery. On to Mawson. Mawson is our deposit that we put a resource around in February last year. It was our maiden resource. In terms of endowment, it's just over 28,000 tonne of contained metal. The resource is very shallow. It's between 65 metres and 300 metres and remains open at depth. Metallurgy has been completed, excellent metallurgy. So this is high Fe MgO ratio. This material runs straight through the Nova Bollinger plant. It's the ideal feed blending agent for the BHPs of the world. We've completed seismic reprocessing. That's led into targeting, which I'll talk to in the next slide. And we believe that this resource is definitely a foundation on which to grow. We're far from finished with exploration there, from, as you'll see in the next slide. But the last point is really important. It's a strategic mineral resource. Nova's running out of ore 150 k's down the road. They've got less than 3 years to go, and this is compatible ore for that plant. So more to be found at Mawson, and this may seem like we're not doing a lot, but we've been reprocessing the seismic. We've been looking for where does this intrusion come from that's carrying all the mineralisation. The reprocessing of the 3D seismic has identified this compelling target zone, which marries with the structural analysis that we've completed. So we've come up with the same zone. Independent of that, we've pushed out this data to Sensor, and they've completed some machine learning, some artificial intelligence on the data, and completely non-confirmation bias independent of the data that we've generated in-house from a structural and a seismic perspective. They've identified the exact same zone. So that makes a very compelling zone for us to test. This zone sits here, you can see it on screen. The chonolith, we believe, comes through this break in the Mawson Fault, and there seems to be a zone of what is interpreted to be intrusion up against this big D9 conductor. Anybody that's been following Legend would understand that we've got massive stratigraphic conductors at Mawson. They can literally hide anything. We drilled 31 metres of massive sulfide grading 2.6% nickel, 1.5% copper. Couldn't see it in downhole EM. That's how thick these graphite conductors are. So you could literally hide anything in there. Just finishing up on regional, like I said at the top, we've got 2,500 square k's, but we're rationalising that ground. We're continuing to build up the pipeline of targets. Some targets fall away, others come up to be the next octagonals, and hopefully then go on to a mineral resource, i.e. Mawson, and the ultimate aim, delineating the next Nova Bollinger. The exploration schedule, quickly in my last 2 minutes, we've got a bit on. We're kicking off with the fixed loop surveying at Octagonal next month and drilling off the back of that. We've got drilling planning for Mawson, and regionally, we're continuing with our EM surveying. So, like I said at the top, you saw a bit of buying in Legend over the last 10 days to 14 days, and basically that's because it's just too cheap. If you look at the look-through value of Legend at sort of 1.2 at the bottom, we've got an in-ground resource worth multiples of our current market cap, and we've got 14 million in cash. So I'm not surprised to see the buying. I'm happy to dip into my own pocket and do some, as was Mark Wilson, as was Tony Walsh, as was Hilary McDonald. So we're backing ourselves, chasing these nickel deposits. We've got a dedicated team, as I talked to. The mineral resource at Mawson definitely has upside to grow. It's a strategic resource, and the final point there, we're funded to execute. So very much watch this space. Thank you, Chrissy.
Thank you. Thanks, Oliver. Appreciate that very much. All right, Lithium Universe Chairman Iggy Tan was quoted recently as saying the current short-term dip in lithium prices is an advantageous window that presents tangible opportunities for Lithium Universe. So this gentleman here, Executive Director Gernot Abel, has been chosen to come to us explorers and explore those opportunities for us and their plans for the development of a lithium refinery over in Quebec. Would you please make him very welcome, everyone?
After a 10-year hiatus, a new lithium company emerges from the galaxy. Introducing Lithium Universe Ltd, committed to building a lithium future. Our universe is chaired by the original lithium trailblazer, Iggy Tan. Iggy ran Greenbushes Lithium in 1995 and was the first to commission a lithium carbonate plant in Australia. He was also the first mining executive with an eye on the lithium-ion battery future, some 25 years ago. Iggy and his team built the Mount Cattlin spodumene mine, rated at 137,000 tonnes per annum, and they also built the Jiangsu lithium carbonate plant, rated at 17,000 tonnes per annum. When Iggy first joined Galaxy, their market cap was less than $10 million, before ultimately rising to in excess of $2.5 billion at merger with Orocobre. Galaxy was also the first large-scale integrated mine-to-refinery project of its kind. That's Mount Cattlin, million-tonne per annum hard rock spodumene mining operation, utilising four-stage crushing into dense media separation to produce circa 137,000 tonnes per annum. Then on to Jiangsu, which, when it was built, was the largest of its kind in the world. Jiangsu was a Western-style continuous processing plant, which to this day remains the gold standard in quality control within China. Whilst these projects now reside with Allkem and Tianqi, it's important to note that when Iggy designed, built and operated these projects, the lithium prices were but a fraction of what they are today. This is a testament to his vision, foresight and ability to deliver on time and on budget in very difficult markets. Joining Iggy on the board is Greenbushes veteran, Mr. Pat Scallon. Pat ran Greenbushes for over 25 years, has significant spodumene concentrating expertise, and oversaw expansion of Greenbushes from 200,000 tonnes per annum to in excess of 1.4 million tonnes per annum. So why are we in Canada? Well, Australia produced in excess of 2.3 million tonnes of spodumene in 2022 and is a pillar in the China lithium battery value chain. Now, the fertile ground of Canada, it's considered to be potentially as fertile as that in Australia, but we're yet to see any real production emanate from that region. However, with an influx of mostly Australian-based junior exploration expertise now forging a path across this new lithium frontier, we're expecting this to change. And as Mr. Lithium Joe Lowry says, Canada wants to be the Australia to North America. A few of our philosophies: We're not here to explore just for exploration's sake, but rather we're here to build a lithium project in Canada as quickly as we can. Introducing our Polar Exploration project. This project is located along the Trans-Tyger Highway in James Bay, Quebec. It boasts a generous footprint of circa 240 square kilometres and was staked when the lithium prices were at their previous lows. Also, it's nestled between what was then two relatively unknown junior exploration companies. So our Apollo project is less than 30 kilometres from Patriot Battery Metals Corvette and also less than 30 kilometres from Rox Resources Adina. As you'd all appreciate, it's been a hotbed of activity in that region over the past 12 to 18 months. Phenomenal drill results by both Patriot and Winsome have been backed up with mineral resource estimates that are world-class. Patriot declared a mineral resource of 109 million tonnes at circa 1.4% lithium, and Winsome declaring a mineral resource of 59 million tonnes at 1.1% lithium. Both have reported high-grade, thick mineralisation close to surface. We've completed our first stage of exploration in partnership with Laurentia Exploration out of Canada. We completed the high-resolution airborne mag survey and a really extensive soil sampling campaign to determine our priority drill targets for this calendar year. Now, we're all probably, unfortunately, old enough to remember the NBA Dream Team. The NBA superstars which took the Olympics by storm and put the NBA on the map on a global stage. The likes of Jordan, Pippen, John Stockton, to name a few. Well, never to be outdone, and some 30 years later, Iggy has decided to put together his own dream team. Joining Iggy and Pat Scallon on the board is world-renowned downstream lithium technology expert, Dr. Jinwan Liu. We've got Terry Stark, the former GM of Galaxy. We've got John Loxton. He was there and building Jiangsu with Iggy. Roger Pova, he used to run Mount Cattlin, and our newest appointee, John Zablowski, was the CFO for Galaxy. So in a very short period of time, Iggy was able to put together the team that designed these projects, funded these projects, and ultimately operated these projects. Now, what does a typical project timeline look like? Well, from first maiden through scoping, PFS, DFS, and funding, looking at upwards of 8 to 10 years. Compare this to what Iggy and his team were able to achieve at Mount Cattlin, from maiden to first product in just under 3 years. He did this by skipping scoping and PFS stages, whilst running a number of other processes in parallel, whilst leveraging an incredible team culture. Looking at what's happening down the road at the Kwinana hydroxide plant, they completed construction in 2021, within 5 years, however experienced significant capital cost blowouts in excess of $350 million. And their latest reporting would indicate that they're still only operating at 8 to 10% of design. If we turn the page to Canada, the story stays the same. Canada Lithium completed their DFS in 2011, and despite spending $250 million, could only produce circa 110,000 tonnes before filing for Chapter 11 in 2015. Nemaska Lithium, they completed their DFS in 2018, and after spending over $400 million, failed to reach startup in 2019. Compare this to Iggy and his dream team's track record at Jiangsu, from breaking ground to first product in just over 2 years. An exceptionally reasonable capital cost of only $120 million, whilst being able to deliver the highest quality lithium carbonate into market. So why have some of these previously mentioned projects not gone to plan? Well, there was a lack of operating maintenance direction at design, a lack of overall plant operation understanding, limited management oversight at design, and limited commissioning experience. And this is one of the main reasons why Iggy has put together a dream team that are all operators, because it all starts at design. Concurrently, Canada is forcing a critical mineral strategy. This is evidenced by the forced divestiture of Cinnamine from Power Metals Corp and relinquishment of their spodumene offtake agreement, citing a multi-step security review. Unbeknownst to most, Canada also has an established EV industry. In excess of 1.6 million EVs are exported annually, and it's clear that Canada is now trying to force a downstream solution. So where does this leave us? There's limited production that's come out of Canada, coupled with the government's downstream requirement and a lack of processing expertise amongst junior lithium explorers. Our solution is the Quebec Lithium Processing Hub. The Quebec Lithium Processing Hub is a mine to battery grade lithium carbonate strategy. We're going to leverage a 1 million tonne per annum concentrator, feeding a 16,000 tonne per annum lithium carbonate plant. The concentrator will be based on the proven Mount Cattlin design and overseen by the Dream Team. We'll source our ore from either our own resource at Apollo or by entering into 5-year run-of-mine offtake joint venture deals with juniors in the area. These joint ventures will bring forward cash flows for the juniors and enable them to invest in accelerating their own mine development. Then, after that 5-year term, should that junior wish to build their own concentrator on site, they'll be able to do so in conjunction with Iggy and his team. We will help juniors become concentrate producers in their own right. The 16,000 tonne per annum battery-grade lithium carbonate plant will also be based on the proven Jiangsu design and overseen by Iggy and his Dream Team. Battery-grade lithium carbonate will be sold into the Canadian, US and European markets, meeting the government's critical minerals strategy and requirements, but more importantly, providing a downstream solution for Canadian lithium miners. In terms of our project, this project, we've engaged Primero to complete the engineering study for the concentrator. Global experience, including Canadian and Australian, but they've been charged to determine what the cost will be to replicate the Mount Cattlin concentrator, but for the Canadian environmental conditions. This is the flow sheet for the concentrator, something that's very unusual to see published by any company, if you like, but it's a testament to Iggy and the team's confidence that they're on the right path. It mirrors Mount Cattlin, except for the inclusion of this flotation flow, which will serve to increase throughput. Hatched Engineering has been engaged to complete the engineering study for the lithium carbonate plant. Again, world-renowned, reputable company, but most importantly, Iggy's worked with them before. He built Jiangsu with them. And similarly to Primero, they've been charged to determine what the cost will be to build a Jiangsu-style lithium carbonate plant, but in the Canadian environment. The refinery flow sheet. Again, Iggy and the team, super confident, happy to publish this. Worth noting that the purification flow at the bottom, which turns the lithium carbonate into the battery-grade lithium carbonate, was the first of its kind when Iggy built Jiangsu. So we're really trying to fill a downstream gap that's quite significant in North America. There are very few lithium refineries in North America, so it's a gap that absolutely needs to be filled. We're starting to work downstream and work our way upstream. We've had exceptional government support, strong investment interest, and are in discussion with a ton of juniors around establishing that first resource. We also engaged Hatch to complete our lithium carbonate refinery location study. Hatch had an eye on all things important, including water, rail, all the other infrastructure, including availability of employment resources. And after development of a short list of circa 5 locations, we've settled on the Bécancour Industrial Park. It's serviced by a sealed road, has access to rail, and is in close proximity to a deep water port. We always get asked, why are we focusing on lithium carbonate and not lithium hydroxide? Well, it's an easy answer for us. Our team has exceptional experience in lithium carbonate. Lithium carbonate is also the feedstock for LFP batteries. That Battery growth has skyrocketed. I think last year Tesla announced that they'd moved all of their batteries to be LFP batteries, citing improved safety and reduced cost profiles. So in summary, we've got the Apollo Lithium project, which is nestled between what are now two major discoveries, so huge upside potential there. We've got the Lithium Dream Team, so board and management with a proven track record in being able to deliver difficult projects in difficult circumstances, and also the Quebec Lithium Processing Hub concept, which is a vertically integrated mine to battery-grade lithium strategy. So there's no better time than now to join us on our mission to build a lithium future.
Well done, Gernot. All right, team, you have earned yourself a well-deserved break out there for your diligence and being able to sit here in the chair with me for as long as you did. It is packed out there. It's a little bit warm. My suggestion would be to grab your nice cold food and bring it back, or get your food and bring it back here in the cool and have a chinwag with everyone about what we've just heard, and enjoy your break at home as well.